All right, good evening, guys. I'm going to go ahead and tell you why we had a sweet trade today, but I still did not take it. For starters, if we go to high time frames here, which is where we always like to start, the 1 hour and 4 hour were both bearish when our recent last week of trades had been all bullish. Pretty much every single day we have had the 1 hour, 4 hour, and daily all in bullish alignment. Today was one of the first days we did not. It's one of the few days in the past that we haven't. So what I wanted to start us off with was this 4 hour was bearish, the 1 hour was bearish, and I wanted to take to the daily to see what we were going to do. What this means on the daily is that we have a range from this last low to our all-time high, and we are coming in for a retracement. Totally normal. The one thing that I have been watching for a few days now is this liquidity void right here. I've been waiting for this liquidity void to be filled, and it may happen within this move, it may not, but it's still something to keep in mind. And then there's also this fair value gap right here, both of which were super important in my opinion on the daily time frame, and both had made perfect sense for our direction of today. We were looking for a retracement, looking for a correction of all these bullish candles without any kind of realignment. That's exactly what we got today. This 4 hour and 1 hour being bearish was not necessarily a bad thing. What I wanted to start off with was our regular trading hours opening range gap. We almost exactly, I don't have the quarter levels on right now. We can change that just by going to here and hitting the quarter levels. Our quarter levels here, but this is our opening range. This is our regular trading hours opening range gap. We opened, we went to the downside, then we expanded up almost exactly to that CE, respecting it before then moving to the downside. That was relevant for the regular trading hours opening range gap. What was also relevant after this is our first presented fair value gap. These are relevant later on, but important for right now. Our gap starts here, we respect it here, we move through it here, and then we end up respecting it later on throughout the day. For when the first presented fair value gap is being respected, that it's going to be a very textbook day. When it's not, you can expect a lot of chop. But that was not particularly important for the events today. This high time frame market structure just shows the live 1 hour, 4 hour, and daily trend, which aren't relevant for right now. I already told you guys what the 1 hour, 4 hour, and daily trend were, so we can keep those in mind. What I want to look at right now is the ICT Silver Bullet indicator. All of these are available at my WAP in the description. But most importantly, through this right here, is when we come up and we almost hit the CE, what do we hit perfectly? I mean, no bodies, nothing. Very specifically, we hit this London high. When that happens, we then provide some great entries. Now, like I said, we were looking to take bearish trades because the 1 hour and 4 hour were bearish, which means we're going for a daily retracement. That daily retracement, in my eyes, is going to look for large liquidity to the downside on high time frames. We have a London low down here. We have this, which should be Asian lows, from a previous day. And we have our high time frame fair value gap and liquidity void all the way down here. Plus this previous week low down here. These are all levels. These two right here are stacked up pretty nicely. And then this is just that London low from a previous day. So our targets line up and we get a signal for an entry early on in the day. What I look for from this scenario is we have this being a market structure shift. I'm a big advocate for market structure shifts. And then what I want to see is a retracement of 50% of the current move. So we're looking for 50% and we're not getting anything as we keep taking these highs except for this right here. But this high right here doesn't move into any kind of retracement that I would see, whether it's an order block, so we don't get any returns to these bullish bodies in here. We don't get any kind of fair value gap, no suspension blocks, anything of that nature. So there was no valid trade for me. Then as we continue expanding this graph or this GAN box to each successive new swing low, what we get is we continue extending until we get to here. And then we get a market structure shift to the upside. and we end up coming up to this CE. And what do we have in this CE, which perfectly aligns, is this bearish fair value gap. Why this bearish fair value gap is chosen, why it's so relevant, is because we have this low previously and then a gap, which means if we come up and we make highs within this gap, respecting this bearish fair value gap, that would be a balanced price range. That's an area that we can expect price to not return to whatsoever for the rest of the move that we're anticipating to trade. Our ideal entry either would have been at the entrance to this bearish fair value gap or at the CE. And the fact that the wicks ended up extending outside of this bearish fair value gap is perfectly fine. All that means is that there's just extra noise. It's a lot of retail that's expanding outside of that bearish fair value gap. However, these bodies are what we want to pay attention to. They respect the inside of this bearish fair value gap. And this up here could even be considered a breakaway gap, as it's a gap followed by another gap, and this gap never gets returned to, which I'll label as a liquidity void for now. Actually, I'll just label this as a breakaway gap. But that's what I really want us to pay attention to for the entry. Our entry would have been either at the low of this bearish fair value gap or the CE. So we would have had anywhere from 100 ticks of drawdown to 60 ticks of drawdown. So 25 to 15 handles. Nothing excessive whatsoever. Then what we're looking at from there is I like to go to the 1 hour and I like to find our targets. Our targets for today are going to be this right here, which is a swing low, because this low right here, if you look in the bar on the up hand of the screen up here, if you look at this low right here, this low is at 29,113.5 and this low is at 29,113.25, meaning this low is lower, which means we have a swing low on the hourly right here. That gives us some hourly sell side liquidity that I would be looking to target. Beyond that, there's not a whole lot to target. There's not a whole lot back here. There's a swing low right here on the hourly, and so that's also relevant. But one thing that nicely lines up with that is this London low from the previous day. So those would be what I'm mainly targeting for our main take profits. This would be our first one if it gives us a good risk to reward. If not, we'll aim for this one or this one. And then as a long take profit would be these Asia lows or these previous day lows or previous week lows. Those would all be aspects that we're looking for. So we've dropped back down to the 15 second as we're watching price develop, assuming that we had taken this trade. For the record, I did not. And it continues to go down, just very consistent price action to the downside. And we would end up taking profit at this sell side liquidity, just because if you look at, let's say we entered at the bottom of this bearish fair value gap, even at the worst, we'd go ahead and put our stops at the bottom of that breakaway gap, and then we'd end up moving them to the top, this swing high right outside the bearish fair value gap, due to we wouldn't want to see price extend past that. And then we'd place this right here at this sell side liquidity. That gives us a 4-to-1, or roughly a 4.5-to-1 for our first take profit, which is pretty ideal. So we would do that, and then we'd aim for these London lows, and then we'd leave a very small percentage of the position. I typically like to do 2 take profits, and that's it. But we could take a little bit of the position left, leave a runner, and see if it could go down to here. If not, that's fine, and we could just leave stops somewhere above these highs. These equal highs right here, relative equal highs, look like a very good place to enter a stop. But that would have been the trade for today. Once again, we started on those high time frames. The 1 hour and 4 hour were not aligning with the daily, and the daily has been bullish for the last week or two, which has been very nice. But that means that the daily is coming in for a retrace. So we were looking for shorts. That 1 hour and 4 hour then means that we're going to look for a some kind of liquidity manipulation on the upside, which is going to be, in this case, our London highs and almost this opening range, these regular trading hours opening range gap right there that we almost hit that CE of. And then from there, we look for our entry, which we get in the form of there's a breakaway gap and that bearish fair value gap that we enter on. So those two were very important. We enter on those and we label our take profits on the high time frame being 1 hour swing lows, the sell side liquidity here. This 1 hour sell side liquidity there, which is a swing low on the 1 hour, or this London low, which is marked out by my Silver Bullet ICT indicator. That is it for me today. Today, we focused on two indicators, one being the ICT regular trading hours opening range gap indicator, which is what these lines are here. And we can put quarter levels on those, but I didn't think they were as relevant for today. Importantly, on top of that, we had our ICT Silver Bullet indicator, which is what all of these lines are. Anything that I did not draw or is not these three lines is all the ICT Silver Bullet. All of this is available in my WAP. And for the record, I did not trade for one reason only. I typically like to trade high quality setups, which come in the form when the 1 hour, the 4 hour, and the daily are all in alignment and we're trending. Those allow for really high probability setups. Those are the setups I love to trade. But that is it for me today. I hope you all enjoyed, and I will see you all on the next one. Have a good one. Thanks for watching.